Something big is happening and almost nobody is talking about it. Gold demand is exploding, not just a little, but at the highest level in decades. Central banks are panic buying. Billionaires are quietly shifting money. Retail investors are lining up to buy physical gold, like it's 2008 all over again. But here's the scary part. People don't buy gold when things are good. They buy gold when something is wrong. So the real question isn't, why is gold going up? It's what exactly are people preparing for? And should you be preparing too? Today, we break down the global gold rush that's happening right now, and the truth behind the growing market panic nobody wants to admit. Welcome back to the channel. Gold has suddenly become the hottest asset in the world, hitting new highs, breaking records, and dominating headlines.
But this isn't just a price chart story. This is a global financial signal. In the last few months, countries have secretly added hundreds of tons of gold to their reserves. Investors have pulled billions out of stocks and moved into safe assets. And ordinary people just like you and me, are buying gold coins and bars at a pace we haven't seen in years. Something is shifting beneath the surface of the economy. And in this video, we're going to dive deep into what triggered this sudden gold rush. We government and billionaires are preparing whether gold will keep rising or crash, and how you can protect your money during uncertain times. This is not hype. This is not fear. This is a data-driven breakdown of the global financial climate. So grab your seat, because by the end of this video, you'll understand exactly why everyone is suddenly buying gold, and what it means for your financial future.
By the end of this video, you'll understand exactly why everyone is suddenly buying gold, and what it means for your financial future. Section 1. Global Market Panic Explained. The biggest reason behind the gold rush is simple. The world is entering another phase of financial uncertainty. Let's start with what's happening right now. Inflation has been sticky in major economies. The cost of living is climbing faster than wages. Currencies are losing purchasing power, and multiple global conflicts are creating geopolitical instability. When inflation rises, currencies weaken, and historically, whenever currencies weaken, gold becomes the preferred store of value. For example, during the 1970s inflation crisis, gold jumped over 500% in a few years. Not because gold magically became rare, but because people lost confidence in the dollar. The same pattern is forming today, and investors aren't waiting this time. They're moving early. Section 2. Why gold surges during crisis. Gold is not a growth asset. It's a confidence asset. When confidence in the world drops, gold rises. Look at history. 2008 financial crisis. Gold surged as the housing market collapsed. Banks failed. People ran to safety. 2020 pandemic crash. When global markets fell over 30%, gold hit new highs within months. .com crash. 2001 tech stocks collapsed. Gold held firm and then climbed. Every single major crisis shows the same pattern. When fear goes up, gold goes up. And today, fear is rising again. Inflation, recession signals, geopolitical tensions. This is the perfect recipe for a gold surge. Section 3. Central banks are quietly buying gold at record levels. Now here's where the story gets really interesting. It's not just regular investors buying gold, it's governments. Central banks worldwide have been buying gold at the fastest rate in decades. Countries like China, India, Turkey, Russia, Egypt, Qatar have massively increased their gold reserves in recent years. Why does this matter? Because when central banks buy gold, they're making a statement. We don't fully trust the global financial system right now. There are three major reasons behind this. 1. The dollarization. Many countries are slowly reducing reliance on the US dollar for trade. 2. Sanctions fear. Countries fear having foreign currency reserves frozen. 3. Geopolitical uncertainty. When global tensions rise, gold becomes a neutral asset. No country controls it. Think about it. Governments have access to the best economic intelligence in the world. If they are buying gold, shouldn't you at least pay attention? Section 4. Retail investors are rushing into gold. It isn't just governments. Retail investors are joining the rush at a pace we haven't seen in years. Gold coins, gold bars, gold jewelry. Demand is skyrocketing. In some regions, minting companies reported months-long waiting lists. Gold ETFs have seen billions in inflows. People are not buying gold to get rich. They're buying to protect what they already have. Psychologically, When people sense uncertainty, they don't think about profit. They think about preservation. They move money into safe assets. They follow the crowd for safety. This retail psychology fuels the gold rally even more. Section 5. Why gold is seen as real money. For over 5,000 years, empires have risen and fallen. Currencies have come and gone. Debt systems have collapsed again and again. But gold survived every economic cycle in human history. Even today, gold cannot be printed. Gold cannot be frozen. Gold cannot be defaulted on. Gold has no counterparty risk. No matter what happens to the world, gold remains gold. This is why it is called real money. And right now, people want something real. Section 6. Will gold keep rising? Short-term versus long-term outlook. So the big question is, will gold keep rising? Short-term, gold might stay volatile because interest rates, inflation, and market news can cause temporary pullbacks. Medium-term, 1-3 years. If recession fears grow, gold historically rises strongly. Long-term, 5-10 years. The trend is clear. Every major economic cycle pushes gold higher. Over time, gold isn't a rocket ship, it's a lifeboat. Its value increases whenever the world gets turbulent. Section 7. Different ways you can invest in gold. There are 4 main ways to get exposure to gold. Each has pros and cons. 1. Physical gold, coins and bonds. Pros: real ownership, no middleman, good for long-term storage. Cons: must be stored securely, slightly higher premiums. 2. Gold ETFs. Pros: easy to buy, sell, perfect for beginners. Cons: you don't physically own the gold, subject to management fees. 3. Gold mining stocks. Pros: higher potential returns, leverage to gold's price. Cons: higher risk than physical gold. 4. Digital gold savings accounts. Pros: extremely convenient, fractional ownership. Cons: relies on platform trust. A good strategy is often a mix, not all in on one type. Section 8. What most people get wrong about gold. Most investors misunderstand gold completely. Here are the top myths. Myth pound 1. Gold makes you rich. Reality: gold preserves wealth. Stocks grow wealth. Myth pound 2. Gold only rises during panic. Reality: gold also rises when interest rates fall or currencies weaken gradually. Myth pound 3. You should buy gold only when news is scary. Reality: smart investors buy gold before panic hits. Myth pound 4. Gold never drops. Reality: it does, temporarily, but long-term gold has held purchasing power better than almost any currency. Section 9. A practical, balanced gold strategy. Here's a balanced, long-term approach. Hold 5-15% of your portfolio in gold. Varies by risk profile. Combine physical gold plus ETFs for diversification. Don't try to time the market. Use dollar cost averaging. Remember, gold is insurance, not speculation. If the world gets chaotic, gold acts as your shield. If the world stabilizes, gold still protects your wealth quietly. And that's why millions of people, including governments and billionaires, are suddenly buying gold again. Before we wrap up, remember this. Gold isn't trending because people suddenly discovered it. Gold is trending because the world is changing fast. For centuries, whenever nations fought, currencies weakened, or economies entered chaos, people always ran to one thing: safety. And gold has remained the universal symbol of safety for more than 5,000 years. Today, we're watching the same pattern repeat. Central banks preparing quiet, investors protecting silent, ordinary people sensing instability and moving their money into something real. So the real question is no longer, why is everyone buying gold? The real question is, what are you going to do with this information? Maybe you won't buy gold, maybe you will, but ignoring the signals has never helped anyone in history. Gold is not about fear, it's about preparation. It's about protecting your family, your savings, your future, not when the storm hits, but before it hits. If this video opened your eyes to what's happening behind the scenes, hit the like button so more people can understand what you now know, and comment below. Do you believe gold will rise further? Or is this just hype? I read every comment, and your insights help this community grow. Thank you for watching. Stay informed, stay prepared, and as always, stay financially sharp. I'll see you in the next video.